We're talking about Roubini and how he was wrong. And I've got my expert here, the man himself, Mr. Michael Bacina. We're going to work out whether each coins are securities or not. We'll see you guys right after this. All right, guys, welcome back. Now, just fully introduce our beautiful guest today, Mr. Michael Bacina. He is a partner at the Piper Alderman Legal Group. He heads up the blockchain group as well, and he works with a lot of the leading Australian blockchain companies currently. Welcome, Michael.
Thanks for having me on the show, Fred. It's a pleasure.
We're going to talk about all sorts of things, but just it's good to be back. It's good to be back. Welcome back. Market right now, let's just give you a bit of a sentiment. We're looking at Bitcoin trading at $6,248. Ethereum down to $193, under $200. For some reason right now, I'm seeing EOS down, Ripple down 4%, Bitcoin Cash down, Ethereum Classic down, Litecoin down. We just took a recent dip, but Bitcoin's just holding.
Defying gravity.
I love it when Bitcoin holds. Isn't that amazing? Let's talk about what's going on right now in the market. Got this weird one. Komodo is leading the pack right now. A privacy coin seeing gains of 10%. DigitX futures as well are on the flip side, down about 12% and down to number 69 in market cap. Bitcoin trading up. Last week we dropped about $400 in 30 minutes, down to 6,300. Trading at $6,248 right now. Still waiting for that ETF decision. Still waiting. Thankfully, markets are on the way up to obviously trying to acquire right now. Now, there was a Bitcoin puzzle. What do you think about the Bitcoin puzzle, Michael? Can we bring the Bitcoin puzzle up, Joel? So apparently there was $2 million in this puzzle. $2 million.
Well, there's been a few puzzles that have been around over the years. There was that painting, and this is the latest one.
Look at this one. So somewhere in there is $2 million of Bitcoin. I can see like a F and a 6 and a 4, a 310 and a Bitcoin symbol. And a lot of little address. Look at that, all that detail down there. So there's some sort of private key in there. Do you reckon when people do this, they're doing it for the, like, why would you do that? Why would you do that?
Look, I think it's an excellent engagement for publicity around that. And it's also just a cool problem. So a lot of Bitcoin maximalists in particular separate those who are just in there for the business, for those who actually write into the cryptography and puzzle solving.
It's true.
Cryptography goes hand in hand with that. So
it's true.
It's an excellent way of dominating the news, which is some nice good news when you otherwise have Dr. Doom writing in.
We're going to talk about Dr. Doom. Dr. Ding Dong Doom, we're calling him around here. The Roubini man himself. We won't get too salacious. We have my attorney here to back me up as well. But the money apparently has gone out of the puzzle. $2 million has disappeared. $2 million of Bitcoin. It came and it went just like that. Bang! All right, moving on. Litecoin. I'm done with talking about Bitcoin for a little bit. Litecoin had its birthday. Price rise and an exchange listing all in one last weekend.
And no cake.
No cake. And Charlie, the man himself, obviously celebrating 7 years. But we've got an image here. It's now available on Gemini. It's kind of cool. But Charlie sold his Litecoin right at the top. It's pretty impressive. And with the birthday, Gemini Exchange, owned by the Winklevoss twins, received regulatory approval to list Litecoin on the exchange, with trading commencing this Tuesday. Permission was sought from the New York State Department of Financial Services, as Gemini continued their goal of running the exchange that is built on standards of banking compliance. What do you think about the Gemini and how they're doing their sort of legal? Do you think they're like legit?
Well, look, New York State has some pretty strict rules around crypto businesses and had early licensing. So getting through New York gives, I think, Gemini and the Winklevoss twins more credibility in terms of being able to work with regulators. They've taken a bit of heat from their stablecoin having some built-in kill switch capabilities into the contract. So I think insofar as working with regulators to have a more compliant platform, Winklevoss is certainly leading the charge in New York State.
100%. Price went up slightly, back down now, Litecoin to $52. Now, let's move on. Let's talk about, Michael, an area. We really want to dig into a couple of questions here. Just by way of background, you're currently at Piper Alderman. You've got 10 years of experience as a commercial litigator and a rich knowledge, obviously, of blockchain and cryptocurrency, as well as IT and technology. Is that how you got in? How did you get into cryptocurrency?
Well, back in university days, I was running web development and databasing during the first .com boom. I think you might have had your hand in a few similar ventures way back then.
A couple little websites I was tinkering around with.
So my tech interests sort of spanned from there. I was fortunate enough to exit that business early on and focus on law. And then over my legal career, I've had more and more tech clients come in. And then with the rise of smart contracts in 2016, I've been very fortunate to be at an intersection where my IT background and passion for this technology and legal skills come together to be able to help some great blockchain projects. So I'm all about what efficiencies blockchain can bring, but of course ensuring things are going to work from a legal point of view.
Okay. Now, we want to talk about security tokens, and I really want to get into this because there's a major trend right now. Obviously, we're in this phase of utility tokens, and I've been calling them the tulip of the cryptocurrency market. And that's pretty harsh, but you know, there's been this massive bubble, and I think it has sort of boomed. And then we've got this rise or sentiment right now of the security token, where it represents actual assets or value. Tell us, how would you describe what is a security token?
I think that the best example is to call it a tokenized security rather than a security token. That word's been bandied a lot around from even in Consensus and Blockchain Week in New York earlier this year. Every project there was saying, we're going to do a security token. But a lot of projects that are talking about it, if you dig into the detail and say, but what is the security you're offering? Outside of those tokens which are asset-backed, you don't necessarily get a clear answer. So it seems to have replaced, for some projects, saying we're doing a utility token. I've never liked the term utility token because I think there's a huge range of things that tokens can represent, and trying to shoehorn them all into two categories is really quite difficult. And then you end up with projects being put in these categories that just don't work together. So at its most pure form, I think a security token is a digital representation of something which is recognized as an existing financial product or security. And you have to keep in mind that financial products and securities only exist because the Parliament has legislated them into existence. So similar to the DAOs coming up saying, we're going to make our own thing, just like a company, but call it a DAO. DAOs don't exist at law because companies only exist because Parliament created them into being a legal fiction. And similarly, securities and financial products sit around that space. And when you come to things like the Howey test in America, they use the investment contract as a sort of catch-all bucket for things that might not fall within the usual categories of securities. And in Australia, the managed investment scheme regime largely fulfills a similar function.
Right. So we've got the Howey test, the management investment scheme in Australia, and the Howey test in America. So I got to ask. So let's look at the top 20 coins. We'll just bring them up ever so quietly. Do you have any views on any of these top 20 as to which ones you think might be securities?
I have to pull a no comment on specific coins
No comment.
for today.
No comment on.
Those coins are always welcome to come and get our considered legal opinion on it. But I think that what I can say is that.
What should a coin, think about when it's, it's trying to, because there's a lot of jousting about this, right? Because this is a big concern.
Correct.
And what kind of things would you look for that would signify that something's a security token?
Well, I think that the biggest giveaway that you've seen, and certainly some projects that have been shut down by the regulators here, is tokens which offer some kind of share in revenue or some kind of dividend return, or the ability to vote and control what a business might be doing in the future. The dividend and revenue sharing has shown up in projects over the last 18 months. And a couple that have been shut down in the Australian space were offering just that very thing. So the hallmark of having an ownership in an underlying business where a return is being paid out is very close to it's looking like a security or some kind of preference share. Equally, saying that a token represents ownership in an underlying business or venture starts to look very much like a share. So just because those who know me know I rag on Tether fairly regularly, otherwise you have things that look like derivatives and tokens which purport to represent an underlying thing of value, like Tethers saying they have $1 deposited in their bank account for each Tether on issue, run the risk of being considered to be derivatives, which are another form of financial products, or you could use security as a shorthand to pick them all up. But I think that you don't see within the top 20 really nowadays a lot of tokens which are purporting to offer dividends or revenue payments, and I think there's an important distinction to make between, say, projects which might have a masternode system running, because my view is that if users are running a masternode on a network and being rewarded for doing that, much like miners on Bitcoin, they're not earning a dividend or revenue share. What they're truly doing is providing a service, being the computing power and the processing that's being delivered. So I think there's an important distinction there from tokens which might otherwise be considered securities.
So masternode, I guess that's different. But what about, in terms of something which is centralized or decentralized? Do you think that plays it? How does that play a factor in determining whether something's a security or not?
I don't think it's determinative by itself, but I think it definitely plays a factor. For example, at least in Australia, the comments to the Senate years ago about Bitcoin focused on the fact that things are fully decentralized and you're looking at peer-to-peer transfers, and it's difficult to see that someone is engaging in, for example, a non-cash payment facility if transactions are happening peer-to-peer without any involvement of the party that originally issued the tokens. That's certainly a feature of Bitcoin that has been identified before the Australian Parliament previously.
Well, so Neo, it issues. If you hold Neo, you get gas, and gas can be bought and sold, right? So that's it's worth something. That to me feels like a dividend to me.
Correct.
In what you're describing, it is still a cryptocurrency to some extent, but that feels very. That sounds like a dividend. Would you say?
It certainly does sound like one, but I think you also have to look at what's the real purpose of the token, and is this merely incidental or part of a bigger system? So one of the challenges of any classification, whether it's utility tokens versus security tokens or financial products, is everything is frustratingly a case-by-case analysis, and exchanges which list tokens have to look at this problem to say, if we have lots of customers in a country where there could be a problem of this token being traded, and you'll see that Australian exchanges have tended to list lesser numbers of tokens overall than overseas exchanges like Binance. And I think it's because of that challenge of needing to look really closely at each token and see how it will be dealt with, or might be dealt with, because it's a grey area in a lot of ways. We have our guidance documents from ASIC, but you've also got ASIC Commissioner coming out to say, we recognise there are tokens which will not be financial products.
This is feels a bit grey to me right now, Mr. Bacina. Question, utility tokens, right? A lot of them have raised money. There's a lot of promises that have gone into some of these white papers, websites, and all sorts of things. Do you think utility tokens are securities?
I think there are some...
Are they at risk of being...
They certainly are at risk. But I think that you can see, particularly in Australia, with the Australian Competition and Consumer Commission delegating its powers for misleading and deceptive conducts for cryptocurrency tokens over to ASIC, that ASIC has been looking to use that as a easier tool to go after projects which it thinks have been engaging in conduct which is misleading and deceptive. Because even under securities laws, there's a prohibition on misleading and deceptive conduct. So when there's a white paper saying, we're going to make these amazing things happen. I mean, a good example is Munchie, given the decisions in America with the SEC moving quickly about promises for crazy returns and how things are going to go. It's that misleading and deceptive conduct which is really the mischief that I think the regulators are trying to fix. I don't think that from a policy perspective, they want to get into, is this project a good quality project? But at the big picture, utility tokens were all about capturing the value of a network as it grew larger, in the hopes that the token might become more valuable if lots of people came on the network. And I think we've seen a lot of projects realise that these kinds of networks involve marketplaces and bringing in the adoption of a whole lot of customers. That's two really hard problems, plus all the challenges of operating in a very grey space of crypto. So it's unsurprising that you have a lot of these projects that just don't make it through, or they make it through their builds but struggle with adoption. I think they've just been really early.
But with that, there are a lot of coins, you know, in their presentations, they said to that effect, you know, how, you know, this token's going to go up in value because of the circulation and the network effect of the coin going around. You know, some of these projects, you might even admit that people were buying them with the intention that they were going to go up in value and they were going to go and sell them. You know, I think that's the underlying intent, right? But legally, does that give them any recourse to do anything about this? Like, what are a lot of people have, like, you know, they're holding bags of coins, they're never going to list, never going to be any, you know, they're worth either 90-95% of what they bought at. Do you think there's any recourse for them? Is there any path for them to get their money back?
I think it's really hard because most of the time you're looking at people who've probably put in not large sums, so you're sitting in sort of class action territory, and I think, you know, there's a class action lawsuit that just dropped in the US against Ripple not long ago, so there's 2 against them at the moment. But I think that we'll see class action lawyers coming in against projects. But you know, lawyers also look at things and have to give clients advice around what's commercial. And if there's a project which has spent all its money going on conferences around the world and marketing and whatnot, and there's nothing to recover, then there's a real question of, well, is there anything to go after? Because trying to prove that something failed because it was a high-risk venture which, for various reasons, wasn't quite a fit, it looks no different to any early stage startup where people are investing in it versus something where it was a bit more on the scam side. I think you see regulators, particularly the SEC and also in Australia, the focus being on the scams because there's been a large number of scams. And I think Dr. Doom was raising that in the Senate submission.
We'll get to that. We'll get to the doctor himself. But let's talk about, so some of these projects, it's never going to happen. So you think potentially, have those people sort of just lost their money?
Well, almost by definition, if the project's never going to happen, then yes, because purchases of tokens which are structured as a pre-sale, it's like buying a voucher for a pizza for the pizza shop, but it turns out that the pizza shop miscalculated how much it'll cost to build things, or they've built in a bad area, and they're never going to make the pizzas, you're never going to get them. So a lot of the tokens and the utility tokens were framed as pre-purchase of digital goods. And while I think there is a space for that, I mean, baseball cards and collectibles have always been something where people purchase them. Stamp collectors, they've never been viewed as securities, but people have been able to buy them in the hopes that one day they might be worth more, but they could also be traded around. It's just that in the last couple of years, the rise of these crypto tokens that could be traded at high volume and could raise money very, very quickly have created this problem that never existed before. So I think the law's trying to catch up there, and there could be certainly a lot of risk over projects which have perhaps sold something that might not be designed to be a security, but sold it in a way that it could be interpreted as a security, much like, say, Munchie, where a lot of the judgment focused on how it was being sold. So I think that, I mean, I often say a token can really, the easy way of thinking about it is it might become a security for 2 ways. One is how it is designed. Does it have a dividend? Does it have an asset sitting behind it? What is the actual legal structure? But 2, how is it presented? Or, you know, it's a timely part of the year for it, but selling you a pumpkin is not selling you a security, but selling you a pumpkin that might be delivered on the 29th of October with a view of you reselling it to someone else could be. So there's this grey area that I'm not sure is going to get resolved in any hurry.
Well, I think some of the internal workings of these tokens and how the money's been spent, I think that's probably more where there's some interest, wouldn't you say? I think, then rather than this judgment of whether it's utility, because clearly they've bought pizza tokens or time zone tokens or whatever it may, you know, pizza coupons. That's probably the best way to put it. All right, let's talk about security tokens, but right. So I'm fascinated by this, and I'm interested in your view. Let's imagine we get these new security tokens. We establish a market for them to be traded, and in general, securities or stocks need to be traded within the rules of that country or that jurisdiction in which they operate. Whereas cryptocurrencies are global, right? How can we take account of this? How can we deal with this borderless new market?
Look, I think there's going to be some inspiration taken from Forex markets around how these will be dealt with, because foreign exchange is liquid across borders as well. So that's our best analogy. And in law, we often move as close as we can to the nearest analogy and build from that. I think that you can still look at synthetic listings in Australia of American stocks and funds which hold US stocks to make it easy. There's also platforms which permit you to trade on foreign exchanges. So I think that the technological challenge that tokens enable this, where shares in their native state, being just piece of paper share certificate,
Yes.
were very hard to move cross-border. I mean, the last time we had pieces of paper that could move easily cross-border, bearer bonds, which are probably only really known to your viewers if they watch some amazing early 80s movies about terrorists and kidnappers, became outlawed because they were so easy to move around internationally without AML.
Apparently,
KYC.
Roubini is telling us that we do watch things about terrorists, and
Well, we'll come to him shortly.
yeah, we'll come to him in a bit. We'll come to this. We'll come to this in a bit, guys. We're getting there.
But I think the benefits of tokenized securities are so great over the existing securities administration and framework that they will just take over. It may take 5 or 10 years for them to permeate their way through because of the speed at which regulation moves. But NASDAQ continues to look at how they might be able to put on a security token exchange. The TSX is looking at it as well.
Malta Stock Exchange.
We've got Malta, but look, the reality is you need the major Western jurisdictions to come on board because they have the big market. So we've got these great island nations like Bermuda and Malta and others that are testing out perhaps frameworks, but I think until those get adopted, it's going to slow down the speed with which everything will move across. But I can tell you there's a lot of interest from existing financial services businesses into the advantages that blockchain brings. Not necessarily tokenizing immediately, but even looking at the benefits that can be gained by using blockchain for things like registry management and other things.
Once, I guess, what are the challenges you see from a regulation perspective for, say, Australia or the United States to actually get security tokens going? Do you think a security token could launch today, right now?
Oh yes, I think it could. I think the challenge is this sort of, at the risk of treading back when I said utility and security are two bad categories. I look at this 3-category model of there's something which is completely a tokenized security, and it's going to have to be compliant with all the existing regulations around the issue of a security. And then over here you've got something which isn't a security. Utility tokens are really defined by what they weren't. Maybe your loyalty points and other things which have been tokenized, which are plainly not. Your pizza voucher, pre-purchase of digital goods that's genuine. And then in the middle you have this interesting space which is very active in America at the moment, where you're seeing various things being offered up in compliance with the US framework, which is largely around what they call their Regulation D, where investment contracts can be offered to accredited investors. And that might be analogous to, say, using a managed investment scheme here offered to wholesale or sophisticated investors. And that middle category is very interesting because there are projects offering up tokens which ought not to be, from the legal structure, be considered to be financial products themselves, i.e. they can be traded internationally with no restrictions whatsoever, but also tokens which are being issued which should be the subject of whitelisting and things like that. So Polymath and Harbour and other projects which are looking at keeping controlled whitelists to deal with the secondary trading problem. So today you could issue your shares in a company using a digital token instead of the share certificate. It's just a question of what rails will you build around that, because you want to know as a company who are your shareholders at any given time, because if you need to have a vote, you need to know who's voting for whichever resolution. So it's a secondary problem, I think, around how do you track who holds the tokens. And I'm a bit internally torn because there's some fantastic projects that are being structured such that the tokens aren't financial products, including some asset-backed tokens, which are very exciting. So we've been working on a model at Piper Alderman as to how you may be able to push out asset-backed tokens where the tokens themselves won't be technically considered a financial product, and that would enable trading on many exchanges immediately while the actual initial offer and the product is fully compliant and licensed. So the entire licensing regime around financial products also poses a challenge because all the OG crypto projects were not generally involving those who had licensing or access to licensing. And then you've got the Winklevoss twins coming in, and now Lovell Money couldn't have got you a license coverage last year, but now there are holders of Australian financial services licenses getting involved in crypto saying we will put our license on the line for this project, make sure compliance is there. And I think the regulators are happier with that approach, if I can make that assumption.
Okay. You suggested there, but so you have an asset, a tokenized asset. The initial offering would be to wholesale investors.
Or could be to retail investors with the appropriate registration of the offering with
right,
ASIC.
with the or accredited investors in the United States.
Yes.
And then it goes on to an exchange, and it is traded with retail investors, And like, does that pose any problems? Is that going to work?
Well, that's the big question for these, because that's the area where there's a lot of value in being able to have that secondary liquidity, and that's why tokenized securities or security tokens have a huge value edge over existing stocks, because the promise of potential secondary liquidity is really a huge driver, as well as the administration savings of having a fully automated system that could be partially or fully decentralized. So based on what we're looking at, I think that framework is possible. It still means that
with a whitelist or something, or
perhaps not, but the underlying point is still you'll need to be passing anti-money laundering and know your customer checks with the issuer, as it were.
Yes.
So if someone wants to come back and say, all right, I have a stable, say with Gemini, for example, come back and get their US dollars out. If my tokens have gone to you, you might then go back and say, okay, well, you need to pass your check with Gemini to prove who you are before they'll give you the cash. So I think it's about regulators finding where they're comfortable, where the anti-money laundering and know your customer check is. And for digital representations of shares, it's going to be on whitelists for exchange of the shares, because you need to know who's on that register.
Right.
But for things which represent ownership of an asset, you might be in a position where you don't necessarily need to have that. So tokenizing things like precious gems or precious metals may be able to be done in a way that, because it's really trading it like a commodity, that it should be subject to different rules that ought not to be as strict as
Well, that's fascinating,
stocks.
right? So let's say this exchange, these markets, right? They're trading these stocks. The exchanges commit to giving the KYC of the holder of the tokens to the project. That's what I heard you were talking about as a concept.
No, I think it'll be more the token holders. So when someone comes in to buy the tokens, they're obviously going to need to be passing AML and KYC.
Yep.
Then there may be some secondary trading. But if someone wants to come back and say, all right, I bought $100 worth of Gemini tokens, I'd like my $100, please. Then when they go to Gemini, they're going to need to ID themselves and pass whatever checks Gemini has that the New York regulators are happy with.
I guess what I'm saying, like, so if you had this crypto share, and if there was some way, say we traded it off exchange because we have some sort of OTC deal, but in order for say I give you the cash, you give me the tokens, and they're security tokens, and they're based on shares. Maybe there's some sort of unlock or KYC AML that I must do in order to be able to, register or use those shares to receive the value. Maybe there's
absolutely. I think that when you get to the point of any dividends or revenue sharing or money going out, there's issues around tax withholding if it's moving internationally, or the money laundering concerns. So I think it's the point at which you start to see those kind of payments happening that you need to ensure there's a whitelist in place. So I think that any cryptographic representation of shares is going to have, at least for the time being, have whitelists baked in. There's a lot of projects working on that because it's a sensible form of regulation which can be adopted without too much difficulty. And obviously for Bitcoin maximalists, they're not going to like that, and the libertarian wing of the crypto community saying, well, we don't like that at all. But for those who could take advantage of this to say, well, this is a faster way of running our registry and doing all of our voting, we don't want to have to pay huge amounts of money to registry services. And you've seen some existing share registry businesses investing into blockchain projects because I think they see the writing on the wall and say if they don't adopt this technology to help listed companies manage their registers, someone else will. Because right now in Australia, if you lose your holder identification number, it's very easy for someone to get hold of all the information about all the shares you own. They're all, of course, blocked out on paper, but for those who are only occasional share traders, they need to keep that safe. It's analogous to a private key. There's usually a bit of postcode authentication as well, but the reality is, with Australia being so centralised around Sydney and Melbourne for a lot of ownership of assets, that's not that many postcodes to guess to get in if you could get someone's HIN.
What sort of trends are you sort of seeing right now in the market, Michael? What excites you?
I think there's a flight to quality, and I think part of this move towards tokenized securities or security tokens is about representing projects which say there will be value which is being unlocked here in an underlying business or asset which is on offer, whereas previously it was just a value in a platform maybe, or the Kickstarter kind of idea of you're getting the tokens cheap, but the thing you'll be able to redeem your token for in the future will be valuable. I think that a lot of the larger funds, which maybe previously were looking around or willing to purchase tokens in the hopes that they'd be worth more in the future, are now very much looking at equity in the underlying business. And that, I think, a lot of people working in crypto looked at early to say, oh yes, it's an awesome way where people were raising money through a pre-sale, but the reality was it would be in keeping the underlying business if there was value being generated in that.
What do you think we're going to see in 2019? What's sort of your forecast?
Look, I think over 2019 we're going to see, regulation continuing to creep forward. I think those island nations will press ahead with their pilots, if you will, of regulation, which, if they work successfully and we don't see a lot of scams in them, you might see some Western countries, larger Western countries, saying that works, let's look at it or see how it can interface with our existing rules. So I think that there'll continue to be a flight of projects to some of those nations, and it'll just depend. I think if the US can find a satisfactory framework that they're going to be comfortable with and not have too much of a pushback from Congress around the recent hearings and how their regulation will work, I think you're just going to see higher quality. I mean, you just saw St. Regis in Aspen do in effect, a tokenized real estate investment trust, and I think they raised, was it 18 million US through that process, which was just a pure token issue tying into shares, and was very popular. So they got a lot of press from it, and it certainly helped their project. So I think we're going to see more of that. So you're going to see a lot more traditional, if you will, fundraising, accepting that it's an offer of perhaps a security and doing it in a compliant way. May not squeeze out the pre-sale tokens or tokens which have an obvious function, like a really good Australian one coming up, although disclosure we advise, Liven is a reward point token and functions properly like a reward point within their system. So there's always going to be room for tokens which aren't securities, but I think you really need to have a whole range of different categories to capture them properly, like reward tokens, like pre-sale tokens, like share tokens.
Any favourite coins? Do you have any favourite coins?
Oh, look, I've been an Ethereum fanboy since the early days. So I continue riding the roller coaster there.
Wow.
But I really, smart contracts are where I caught the bug initially. So I think that WAN chain's a really interesting one that I like, with that whole move towards building in cross-chain and driving what you can do with other smart contracts. And I think there's some upcoming stable coins. We're working with a party on a gold-backed stable coin, which is very exciting because having these stable coins permeate and be used in smart contracts is really what we need. You saw a lot of the projects last year suddenly starting to look at, we need dual tokens. And of course, one of them would be a stable coin, because they realize if they don't have that stable pricing, then it's so hard to get the adoption through.
Right. Awesome. And when the clock strikes 12 on New Year's Eve, this year, 2018, Mr. Bacina, what will be the price of Bitcoin?
I think it'll be above 10,000 Australian. That's my
10,000.
Not financial advice.
We don't do financial. No financial advice. We don't do financial advice on the show. All right, moving on. Let's talk about Dr. Doom, Mr. Roubini himself, and we're going to really dig into this, guys. We're going to unpack this. The big story over the weekend, the US Senate Committee on Banking, Housing and Urban Affairs conducted a hearing entitled Exploring the Cryptocurrency and Blockchain Ecosystem. It's interesting. I like this idea of hearing, and testimony. So strong. Lots of professionals came in. Dr. Roubini himself, Dr. Doom, aka the Doomstar, Doom Diddly Doom Doom Doctor, the man himself. He is apparently an esteemed professor of economics, and it is because he has one claim to fame where he predicted everything was going to fail, the sky was going to fall in the 2008 financial crisis, and so apparently people listen to him now, which is kind of a thing. Now, he has, in 5 minutes, in his testimony, let's just break this down. He has made comparisons between cryptocurrency and the following: North Korea, the Flintstones, threw shade at Vitalik, had a little Vitalik Buterin, founder of Ethereum, labeled blockchain as a glorified database, and called cryptocurrency the mother of all scams.
Fighting words.
That's them fighting words. That's so strong. Sorry. He also made mention of criminals and terrorists as well. Forgot about that part. My apologies. This is in 5 minutes. How do you think, just starting, we're going to roll the first video. I don't know, Joel, if you want to spin this up, and then I'm interested in, Michael, your view on this. Do you want to spin this first video of this chat? He's got Roubini is just throwing shade. Let's hear it.
Development is centralized as a technological elite is police, prosecutor, and judge. They arbitrarily change the code and fork coins into new ones when things go wrong. And while is massively concentrated in crypto land, the Gini coefficient of inequality for Bitcoin is worse than North Korea. It's quite an achievement.
So, Roubini's made some pretty good points, right? He's talked about centralization in mining and exchanges being massive issues, and I don't think, everyone can sort of see some of that. But he's got some serious inconsistency in his knowledge, and our resident, Andrew Munro, the blockchain man, the crypto expert himself, has written an incredible criticism and really cut this all into many different pieces. Joel, if you want to post the link so everyone can look at this, and I just want to quote a few things, and there are a lot of poorly thought out thoughts, I guess, within this. But just to start, Michael, what do you think about this in terms of Roubini coming in, the doomster, throwing shade on everything? How do you think that's affected the cryptocurrency space?
Look, I think it's, perversely, I think it's been good for the cryptocurrency space. The issue is that Dr. Roubini, I mean, he does have a few degrees as well for his qualifications. He's an esteemed academic, but the arguments he's raised...
I've got a few degrees, actually. I've got a PhD in hard knocks.
Let's get you before the Senate. But fundamentally, I think, crypto's always had a bit of infighting, right? There's been a bit of tribalism, people throwing shade on various projects. But I think that one thing that Dr. Roubini has helped with, and perhaps his Dr. Doom moniker is really good in that regard, is he's kind of created, I think, the Fantastic Four are Dr. Doom's counterpoints. I think he's created the Fantastic 4 million, the people who've come together to say, you know what, we might have some differences over where the Bitcoin Cash is garbage compared to Bitcoin, but this guy's just saying stuff that we don't agree with. So having a common point of a
common enemy. A common enemy.
Your words. I
didn't mean that. I meant this is not financial advice. No.
But a common point to hear and go after and rebut and debunk, I think is quite useful.
I think a common enemy is an incredible thing, right? We're coming together around this. Now, I just want to quote something. Here comes some spice. Ready? Let's roll with this. Joel, if you want to bring up this comment from Roubini himself, it says, "The new refuge of the crypto scoundrels is blockchain, the technology underlying crypto that is now alleged to be the cure of all global problems, including poverty, famines, and even diseases. That, as discussed in detail below, blockchain is the most overhyped and least useful technology in human history. In practice, it is nothing better than a glorified spreadsheet or database." Wow, spicy words.
So what were the crypto scoundrels using before blockchain? I thought they needed blockchain too.
That's interesting, isn't it?
Yeah.
I don't know what we were using. What were we using before we scoundrelized things? That's very strong. But Mr. Munro, our crypto journalist here at Finder, he notes that banks themselves, including institutions like World Trade Organization and the IMF, disagree with this. Christine Lagarde, the director of the IMF, has identified distributed ledger technology and digital identity as being the two biggest and most beneficial things to come out of cryptocurrency. Furthermore, she is pragmatic about their use, and she quotes, Joel, if you want to bring this up, "By working together and leveraging technology for the public good, we can harness the potential of crypto assets while ensuring that they never become a haven for illegal activity or a source of financial vulnerability." And the World Trade Center, and I'll quote as well, also said, "These technologies have the potential to reduce trade costs further and to transform international trade profoundly in the years to come." That is from the World Trade Organization. That's pretty strong. Hardly the kind of comments you'd expect to hear from Roubini, right? Called the most overhyped and least useful technology in human history. Human history. That's impressive. That's better than fidget spinners, Beanie Babies,
Garbage Pail Kids.
Yeah, garbage kids. I liked Garbage Pail. Actually, I collected all those. They were fun. Anyway. And then, his opening statement, compare this real and ongoing fintech revolution, right? This is important. AI, big data, IoT, that has nothing to do with blockchain or cryptocurrencies, and the record of blockchain, which has existed for almost a decade and still has only one failing and imploding application, cryptocurrencies. That's incredible. Incredible. This is so spicy, right? Whereas this is not true, right? In Australia, the big four banks, Commonwealth Bank has used blockchain for some time. Another of the big four, Westpac, have been testing blockchain this year with promising results, saying that it complements AI, big data, and IoT perfectly. In Westpac's general manager of corporate and institutional banking, Didier Van Not, said the learning about blockchain was like being a caveman and coming out into the light. That must be human history, right? Being written, but apparently. Outside of the back, firms such as IBM has a huge blockchain situation going on.
Absolutely, and they tie into Walmart's recent announcement.
With their salads, their lettuces.
Yep, the leafy greens.
Leafy
Get into the blockchain.
Get them into the lettuce chain. Alibaba, Amazon, and Walmart using blockchain technology. Forbes even put together a list of 50 of the largest public companies using blockchain, with Amex. Considering Amex was at the bottom of that list, I would bet good money the blockchain might just be the next fintech revolution. Now, another issue Roubini took was with ICOs, right? And none of us here disagree, right? There's been some nefarious activity, treacherous things have gone on, right? Which is fine. Although he has gone a little off the mark, right? And I quote, Roubini quotes, there are hundreds of stories of greedy crypto criminals raising billions of dollars with scammy white papers that are nothing but vaporware and then literally stealing these billions. Now, we've done our research here at FindUp, and we can reveal Andrew in his research, from news.bitcoin.com, and obviously all the total cryptocurrency scams that have been out there, it sort of rounds out to about $500 million. Now, that's a lot of money, but it's far away from this billions and billions of dollars which Mr. Roubini is, referring to, which is stolen on a regular basis apparently as well. It's regularly stolen, on a regular ICO stealing basis. What's regular? What would you say? Like every day?
A few times a week, I guess. I don't know. It's hard to tell with his comments in his rambling paper that supports his testimony. It's hard to see. I mean, I think there's no question that there has been scams. There was that fantastic one with Ryan Gosling as one of the team, and a bunch of exit scams. But there's always scams. So
we've also had a look at this, and the Nigerian prince scam on the email has raised $9.3 billion in 2008 alone.
Just 2008 or 2018?
2018, sorry, my apologies.
Astonishing.
Yeah, $9.3 billion in Nigerian email scams. So everything's got lots of scams. But the thing is, there are obviously a lot of other really good projects out there as well. Let's bring up this scam graph if we can. This is some research we've done. Mr. Madoff, the Ponzi man himself, has done well. Enron's done exceptionally well there. Nigerian prince scam. And then we've got crypto there. Right next to it is the romance scam. That's pretty impressive. Coin check scam. The Bangladesh bank heist. BitConnect and BitGrail. I don't know if it's, it's interesting, isn't it? Just puts it in perspective. But the Nigerian prince scam is pretty impressive that still works.
That's quite amazing.
It's the old rabbit from the hat, right?
They've got to write those emails and make the phone calls and take photos and
have
it's
Skype phones. They must follow up. It's not like a sales lead. Do you reckon Salesforce supplies them software? Sorry. I apologize, Salesforce. I didn't intend to say that. That was too far. So the Senate committee asked for a balanced discussion, so invited Peter Van Valkenburg, a lawyer and director of research at Coin Center based in Washington, D.C., described themselves as a leading nonprofit research and advocacy center. What do you think about Mr. Van Valkenburg? What do you think about him?
I think he's like the Human Torch of the Fantastic Four in this Doctor Doom scenario, if I can push the comics. He's there, he's got the fire in him, and he pushed back on, I think, a lot of really useful uses for cryptocurrency, and made the case, I think, fairly compellingly to the Senate for the same kind of light touch approach that's needed on crypto and blockchain that was used for the rise of the internet.
Okay, so Van Valkenburg, aka the Human Torch, aka the Shining Light, aka cryptocurrency angel, is apparently backed by Galaxy Digital, Andreessen Horowitz, to name a few. We've got Circle, Blockstack, Blockchain Capital, etc., etc., etc. Pretty big names, right? Obviously, it's a bit of a lobby group. We get it. And they're going to fight. But let's have a hear of what Mr. Valkenburg had to say to combat Mr. Roubini. Do you want to spin the reel for us, Joel? Spin it, DJ. We've got a song coming up as well.
Why should we want the pioneers of this technology here in the United States and not fleeing overseas? A simple reason. Because the corporate intermediaries providing today's critical but privately owned infrastructure are becoming fewer, larger, and more powerful, and their failures are increasing.
So it's interesting, you know, he went on to take a few swipes at Equifax and the breaches there, right? So a lot of centralization with these corporate entities making honeypots and things like that, particularly around ID and social security numbers. Then he took a swipe at the SWIFT network, which has been targeted, obviously by Ripple and things like that. And he talked about the biggest bank heist over SWIFT. $1.8 billion was stolen by corrupt employees. And there were other issues where certain devices have been hacked, pacemakers, communication devices, vehicles even, which, you know, cryptographically they're not as secure as the blockchain and things like that, right? And I think, you know, cryptocurrency and blockchain in its essence, it's in its early infancy days. You know, it's like a child learning to walk. And I think it's fair to say Mr. Roubini's come out and gone, oh, geez, this kid can't even walk. And, you know, he's come out pretty harsh and criticized all the problems, given it's good constructive feedback. And we're very grateful, actually, that he could make such a good contribution, right? He'd take the time to write all this stuff and think about it and, you know, throw out all these things that we need to deal with, which I think is awesome, right? I actually think it's great. We've got awesome fuel and fodder now to, inspire us to go and improve this this industry as well. But really, you know, we're so early. You know, he talked about also, Mr. Van Valkenburg talked about email and how long that took. That started in the 70s. And then, you know, what was it, like the 90s, late 90s really, or early 2000s even? Even now email is, I suppose email is pretty prevalent right now. But it took ages for that to get cranking, right?
Absolutely.
And what, blockchain and crypto and Bitcoin's 9 years old? And calling it the whole thing the worst technology in human history, I think, is a little bit of an exaggeration, and I am one to exaggerate.
Just a little, occasionally.
From time to time. Now, we'll also look at, you know, I think what's really important here, you know, there are calls here in terms of some of the bad actors within economic systems as well, you know, and obviously trying to bring that through. And treating the balance that blockchain and cryptocurrencies can provide with some of these economic systems and other these devices, and how it's so early on. You know, we've got another video here. Do you want to roll this, Joel, as well? There are some important arguments, obviously, for both sides, and we just want to bring this out.
Blockchains can similarly disintermediate critical payments and IoT infrastructure. The technology is not yet ready to answer all of those questions today, but it is our best hope. And as with the internet in the 1990s, we need a light touch, pro-innovation policy to ensure that these innovations flourish in America for the benefit and security of all Americans.
That's pretty cool, right? So Michael, what do you think about Mr. Roubini's arguments? Do you agree with him?
Look, I think he raises the technical challenges that blockchain tech has, and to give him his fair credit, on one view, blockchain is a glorified database. It just depends how glorious you think it is. And being able to have this trusted shared ledger is supremely powerful, and we've never had that before. So I think he misses the point on a whole lot of things. So bringing out the scaling arguments and transaction limits and whatnot, there's a lot of people far smarter than you or I working on these problems to get Lightning and other solutions in there to bring it up. So I think that, you know, hopefully we can look back on him in 10 years' time and say, man, you raised issues that were definite problems, but they're problems that are being worked on. It's not as if nothing's happening in blockchain to fix these problems. there's always that balance between centralization and decentralization and speed and other important things. So I think that he's mistaken, and the way to show that he's mistaken is to show the results and the deployments, not necessarily just to throw shade back at him on Twitter.
What do you think about how the Senate will respond to this? Like, do you deal with much government like that? How do you think?
Look, I think it's American politics are pretty hard to guess at the best of times, and with the current occupant of the White House, it's even a harder guess. I think that governments have been pretty fair in how they've responded to testimonies on blockchain and cryptocurrency. I would hope that they will be listening to the full range of testimony that's been given and not just focusing in on these bad news items. It always frustrates me when there's I view it as clickbait, really, because if he went up there and said, oh, look, it's a promising technology, but there are these serious hurdles that have to be overcome before it can be useful, we wouldn't even be talking about it. It would not have even made the news, but it's because he's gone up there with, the Trumpian kind of comments of this is the worst thing ever. Terrible. That suddenly it's on the radar. So hopefully they'll look through the hyperbole and hear the others who've given their testimony and also do their own research, because you just have that technological gap with Parliament and, to an extent, the judiciary, who are hearing cases around crypto that don't have enough time to really get stuck in and understand it. So they have to rely on experts who are coming up. I think he just needs to be shown to not be an expert in the space. I use the Walmart example. When a company that has better logistics than the US Army and the US Post Office says, hey, we can make our logistics better with a blockchain, it's kind of game over on supply chain and blockchain right there. You don't even need to listen to someone like Dr. Doom to say the market is speaking for itself and will continue to speak for itself.
So Dr. Doom has been throwing some serious left, right, and centre insults on Twitter right now. Right, he is cooking up like Twitter troll, like World War Twitter troll 7. It's like WWF, Royal Rumble when they all get together. It's actually as wild as that MMA fight the other day, right? But he looks relatively non-impartial to some extent now. How do you think this affects the credibility of cryptocurrency?
Look,
We've got a question coming in.
A question? I think that it doesn't affect it for those who are already inside the industry, if you will. Or I think those who are just watching it on television or those who are ill-informed can easily pick up on that. Much like when the Law Society wrote an article earlier this year, The Dark Side of Crypto. There was some Australian journalists who put out that piece saying X% of Bitcoin had been used in illegal transactions, but of course later in the paper pointed out that percentage was skewed because of the use on the Silk Road. And if you look at it nowadays, it's a vastly less newsworthy percentage. So, and my comment to that was, if you think cryptocurrencies are used for crime and money laundering, just wait till you hear about this thing called cash.
Cash is an extremely effective device when it comes to illegal activities.
And it outweighs the amount of cryptocurrency being allegedly used in money laundering by an order of magnitude. It's huge. The amount of cash used for money laundering and crime is just, crypto's a drop in the bucket by comparison. So it's as you say, it's an industry just learning to crawl, and it's really important that these things are done right, because if it does ramp up massively, then that's the risk. But I think that there's so much to be done on the cash side for money laundering and protection against terrorism financing that really needs government's attention.
Let's roll this question, Joel. We've got a question, Michael. So from Aaron, does Michael have any opinion on the Digix Gold token? I think that's really, this is from Aaron. Thank you so much, Aaron, for your question. And I think the Digix token is the one that is backed by gold in Singapore.
Yeah, they're operating out of Singapore. So look, I only understand that project, can only speak to it at a very high level, but my understanding is they're one step down the line, as it were. So they're either holding the gold or holding a financial product representing gold. I think that those kinds of projects are really good in stepping forward. I think there'll be some regulatory hurdles that still need to be met. I think it needs a careful analysis. You'll note it hasn't been listed on any Australian-based exchanges as yet. As I mentioned earlier in the broadcast, we're working with a party on a gold-backed token, which we think will be able to be listed in Australia and might be a rival to DigiX, so I can't throw shade on any project or favour it. I think it's really interesting is probably as far as I can go without digging into a lot of details, but I think that the rise of these stablecoins and asset-backed tokens that can be used is fascinating because, one, it's kind of like a return to the gold standard of money that existed before Bretton Woods, which is part of the libertarian philosophy of blockchain and Bitcoin from the early days, but also it enables the use of smart contracts in projects that previously didn't really have any real stablecoin to use within those smart contracts other than turning to some kind of collateralized product like a DAI or something else. So I think from that perspective, it's fascinating because if you can, whatever the gold-backed token is, start to use gold within smart contract transactions automatically, it starts to unlock that efficiency that we've been hearing about for 2 years, but hasn't really come out in many projects yet.
Fascinating price movements in DGX when you watch it as well. And I think there might be, correct me if I'm wrong, this is not financial advice, a difference in the price of DGX and the actual gold price, and maybe there is some sort of arbitrage.
It's about a 2 or 3% premium on the gold-backed token versus gold itself. So there's definitely at least last I checked, so I think there's definitely a little bit of a value given to something that's more easily moved around than going and getting physical bullion. But you know, again, it's in a foreign country. You really want to have these kinds of things local because if you want to be able to buy a token which, say, you can go to a location and get the physical gold, that's your ultimate aim of some kind of asset-backed token, that it can be used to redeem for the value, or if it's going to be backed by dollars, that you can go somewhere and actually get those dollars out. Then you're enabling the movement of value in and out of what might be a smart contract environment really easily and getting you those on-ramps that just don't exist in a lot of current projects, and they need them. So I think this is a really important step.
I agree. And also another fascinating thing, we're going to talk about tomorrow stablecoins as well. We've got On-Ramp coming on to having a chat with us, but I think stablecoins and what is the reserve currency underlying it, I think this gold situation could potentially be one of those contributing factors. Just going to lighten the mood a bit, Google has had a lighthearted jab at cryptocurrency, and we'll spin this video for you. Juxtaposing it with Nigerian prince phone scammers, apparently. So you want to roll this video, Joel, first. Let's have a look.
He wants to make me super rich. Taking this call. Hi, this is Teddy.
Give me that. Give me that. It's a scam. Report as spam.
I need money.
But you work. Oh, look, there's another one.
Who is it?
It's the electric company. They said your bill is super high.
Right, well, cryptocurrency mining takes a lot of energy.
Cryptocurrency? That money's not real?
Yeah, well, I got news for you. Money isn't real.
You gonna live that lie?
You gonna live that lie? I love that. It is a bit of a, you know, that is ultimately the comeback, right? Everyone says, oh, cryptocurrency is not real. And then people say, you know, oh, well, money's not real, you know. And this is a very fascinating whole situation. I do have a forecast coming up. I should put it on another show of when I think what will skyrocket cryptocurrency again. I've been doing some thoughts over the weekend. I've been really in my crypto keep, thinking about cryptocurrency and where we're going. And I've got some very, very, very interesting thoughts. And I don't know, maybe I'm not, maybe I'm crazy, but I think I've got an idea of what's going to send us up to the next, literally the moon. If that makes sense, and provide that next application and use case.
The next other app.
Yeah, I think
not financial advice.
This is not financial advice. These are just really my opinions and not financial advice. All right. Obviously, Google co-founder Sergey Brin has been mining Ethereum with his 10-year-old son, and it also follows the fake news. Some news a few weeks ago that Google had reversed its ban on cryptocurrency. And is now allowing verified companies in the US and Japan to advertise on Google. All right, guys, let's have a final check of prices. Bitcoin trading at $6,288. It's just chilling out. Ethereum at $195, still down slightly over the last 24 hours. EOS down at $5.21. Ripple at 40 cents US. Bitcoin Cash at $440. Litecoin at $52. Ethereum Classic at $9.36. That's an interesting price. It's one of the ones that always confuses me. Tron at 2.3 cents. Cardano has had some interesting controversy over the weekend with its foundation. Still holding at 6 cents. 6.9 cents, almost 7 cents. Binance Coin at $9.60. All right, guys, we want to wrap up here. We want to thank Michael for joining us from Piper Alderman, leading the blockchain group. It's been an absolute pleasure, man, talking about the intricacies and specific ideas around security tokens. I've actually loved and enjoyed that. Do follow him, Mike Bacina, there on Twitter. And Michael is I would love for you to come back on and have a chat with us further as more of this market progresses.
It's been my pleasure.
Guys, do subscribe, press the little bell, join us again, follow us on Twitter, because we are broadcasting live all the time from the Daily Exchange. Yeah! See you guys tomorrow.